1. Be willing to take risks. Building wealth often requires taking calculated risks. Investing in stocks, for example, is a common way to grow wealth over time, but it carries the risk of losing money if the stock performs poorly. Starting a business can also be a great way to build wealth, but it also carries the risk of losing money if the business is not successful. Taking risks can be daunting, and it's important to be aware of the risks involved and to take a measured approach. One way to do this is by diversifying your investments, spreading your money across a variety of different assets, such as stocks, bonds, real estate, and cash. This helps spread the risk and reduce the impact of any one investment performing poorly. It's important to remember that taking risks is an important part of building wealth, but it's also important to be strategic and calculated in your approach. It's important to weigh the potential benefits against the potential risks and to be prepared to adapt your strategy as needed. 2. Avoid lifestyle inflation. Avoiding lifestyle inflation is an important step in building wealth. Lifestyle inflation is when your expenses increase as your income increases. This can happen when you start earning more money and begin to upgrade your lifestyle, such as buying a bigger house, a new car, or taking more expensive vacations. The problem with lifestyle inflation is that it can make it difficult to save and invest money, as your expenses are growing at the same rate as your income. This can make it difficult to achieve your financial goals, such as saving for retirement or buying a house. To avoid lifestyle inflation, it's important to create and stick to a budget, so you can keep track of your spending and make sure your expenses are aligned with your priorities. It's also important to be mindful of your spending habits and resist the urge to upgrade your lifestyle every time you get a raise or a bonus. It's also important to focus on the things that truly matter to you and to be mindful of what you're spending your money on. Instead of upgrading your lifestyle, consider investing the extra money in assets that will grow in value over time, such as stocks, real estate, or a business. It's also important to remember that avoiding lifestyle inflation is a continuous process, and it's important to review and adjust your budget regularly. It's also important to be mindful of how your lifestyle needs and priorities may change over time. 3. Set financial goals and create a plan to achieve them. Setting financial goals and creating a plan to achieve them is an important step in building wealth. Having a clear plan and specific goals can help you stay focused and motivated, and make it more likely that you'll achieve your financial objectives. When setting financial goals, it's important to be specific, measurable, attainable, relevant, and time-bound smart. For example, instead of setting a general goal to save more money, set a specific goal to save $10,000 in the next 12 months for a down payment on a house. Once you have set your goals, you can create a plan to achieve them. This can include steps such as creating a budget, increasing your income, or reducing your expenses. It's important to be realistic and to take into account any constraints or obstacles that may arise. It's also important to review your goals and plan regularly, and make adjustments as needed. This can help you stay on track and make sure you're on track to achieve your financial objectives. 4. Avoid unnecessary debt. Avoiding unnecessary debt is an important step in building wealth. Taking on too much debt can make it difficult to save and invest money, and can increase the risk of financial difficulties. To avoid unnecessary debt, it's important to be mindful of your spending habits and only take on debt when it's truly necessary. When taking on debt, it's important to make sure that you're able to afford the monthly payments and that you're not putting yourself in a position where you'll struggle to make ends meet. It's also important to pay attention to the interest rates of your loans and prioritize paying off high-interest debt as quickly as possible. High-interest debt, such as credit card debt, can be particularly costly, as the interest charges can quickly add up. It's important to remember that avoiding unnecessary debt is a continuous process, and it's important to stay mindful of your spending habits and to review your debt regularly. It's also important to seek professional advice if you're struggling with debt, to understand the options available to you and the best steps to take. 5. Seek professional advice. Seeking professional advice is an important step in building wealth. A financial advisor can help you develop a plan to achieve your financial goals and provide guidance on a wide range of financial topics. A financial advisor can help you assess your current financial situation, understand your goals and risk tolerance, and create a personalized plan to help you achieve your financial objectives. They can also provide guidance on a wide range of financial topics, such as budgeting, saving, investing, and retirement planning. It's important to note that not all financial advisors are created equal, and it's important to do your research and find a reputable financial advisor who is a good fit for your needs. It's also important to remember that financial advice is not a one-time event, it's a continuous process, and it's important to review your financial plan regularly and make adjustments as needed.